So good morning. As Robert said, I'm Jarrod Ferguson from the Western Australian Government Office in London. And just to give you a bit of an idea about what we do, we are a trade and investment agency where we have two main functions. One, helping European, UK companies invest into Australia, and also helping Australian companies export into Europe. So Robert said that things have been a little bit down in the mining industry, which we all know, but my presentation today is a little bit about maybe some of the exciting developments that are happening in some parts of the sector and some of the opportunities that are happening in Western Australia. Okay, all right, so I'd just like to start with this image which highlights just how big Western Australia is. Despite generally people knowing how big Australia is, people don't often comprehend just how vast the place is in comparison to Europe. So Western Australia takes up approximately a third of the Australian continent, and interesting fact, the UK can fit into Western Australia, could fit into Western Australia almost 11 times. So Texas is known for being big, but Western Australia is almost 4 times the size of Texas. So that gives you some sense of the scale, but also that can take a very long time to travel between places. Despite this massive size, the population of the state is only around 2.5 million people, and the majority of that population lives in Perth, the capital city, which is in the south of the state. Another interesting fact, the UK makes up approximately 10% of the entire population of the state, so roughly 250,000 people. And as a proportion of the population, it's by far the most popular Australian state for British people. Has anyone been to Western Australia before? Very good, okay. So to remind those who have, and perhaps to taunt those who haven't, I'll just share this following picture. So this is a view of the city from Cottesloe Beach, and I'd say it was probably taken in the middle of winter. So some information about Perth. Perth is one of the world's main hubs for both the mining and oil and gas industries, with most of the world's leading commodities companies having their Australian head offices in Perth. The city is known for entrepreneurs, with more firms listed on the Australian Stock Exchange than any other Australian city. This despite the fact of being less than half the size of Sydney and Melbourne. Perth is also a leader in METS, Mining, Engineering and Technology Services, with over 650 firms, accounting for over a third of all METS companies in Australia. As a hub for such innovation, the state leads the way in remote automated technology, such as Rio Tinto operating its Mines of the Future program, where it controls from Perth its trucks, trains, ports and drones thousands of kilometres away. Western Australian firms are also responsible for around 60% of the world's mining software programs. And I might just give one little plug. You might be interested to know that as of this Sunday, the first ever direct flights between Europe and Australia begin. So Qantas will start flying between London and Perth in a very zippy 17 hours, almost a day trip, I'd say. Perth will be the only Australian city accessible by direct flights and will become Europe's new gateway into Australia. So it's very exciting, and I'm already booked on one of the flights soon. So I'd now like to talk about what has been described as the clean energy revolution. As social attitudes shift away from fossil fuels and governments commit to a low-carbon future, renewable clean energy is a buzz term on everyone's lips. And while mining and clean energy are not normally considered complementary, in fact, the clean energy revolution in its current form depends on access to certain raw materials, as we will explore in this presentation. Some of the drivers of this shift include national governments, such as those of the UK, France and the Netherlands, setting ambitious targets to ban internal combustion engines in all new vehicle sales from as early as 2030, and the world's biggest carbon emitter, China, are also currently considering a ban. Automakers and disruptors like Tesla too are pushing the transformation into a low-carbon future by championing electric vehicles and battery storage technology. You may have heard of Tesla's recent construction of the world's biggest battery in Australia. This shift to electric batteries is predicated on lithium-ion technology, which requires a range of raw materials, and the world is currently scrambling to secure these minerals. China has moved fast and invested heavily in mining projects to secure access. The rest of the world, however, has not, and is now playing catch-up. The European Battery Alliance, an initiative of the European Commission to foster a European battery industry, has just released their draft strategy paper, and one of their strategic imperatives is that European manufacturers must act quickly to secure their necessary raw materials in light of the global competition in this sector. Europe doesn't want to be dependent on Asia for its battery materials. Equally, governments and investors from Japan, South Korea and the USA are also looking to secure these resources. Initially, the demand for lithium-ion batteries came from portable electronics such as mobile phones, tablets and laptops. And the demand from the consumer electronics sector is largely why Asian countries, where the majority of these electronics are produced, now dominate the battery supply chain. Chinese and South Korean manufacturers, for instance, had to secure their access to battery materials long before it became critical for Europe to move in this direction. However, the majority of recent growth and recent growth forecasts are coming from the electric vehicle market, and this is a sector that is of strategic importance to Europe when you consider the importance of the auto industry here, especially in Germany and the UK. As you can see in this graph from Bloomberg, projected sales of electric vehicles show rapid growth and forecasts are constantly being revised upwards. This graph shows total EV penetration by 2040 of 266 million vehicles, and most likely there has been further revisions since. In response to this forecast demand for EVs and batteries, there will need to be a significant increase in battery manufacturing capacity, which will drive demand for raw material to feed the lithium-ion battery supply chain. This image shows the growth of construction of planned battery megafactories, or gigafactories as they have become known. Bloomberg estimates these factories to double battery producing capacity to 273 gigawatt hours, up from 103 gigawatt hours in 2017. China will boast a 65% share of production. And China, Japan, South Korea, France and the US are major lithium-ion battery manufacturers for hybrid and EV applications. Now, I'm not a very technical person, nor am I a chemist, but I thought it useful to provide a simple overview of how lithium-ion batteries work and what goes into them. Lithium-ion batteries are comprised of two electrodes, an anode and a cathode, separated by an ion-conducting electrolyte. The flow of lithium ions during charging and discharging produces the energy that powers the battery. But please don't ask me any further questions about what this actually means. So no Slido, is it? Slido? No Slido. Lithium-ion batteries vary greatly between producers and battery chemistries. In most lithium-ion batteries, graphite, used in the anode production, is the largest mineral element. And you can see the most common battery chemistries on this image. But you can therefore see the importance of access to the necessary raw materials for this industry. Clearly then, there is a significant opportunity for the mining industry and investors. In fact, battery metals budgets are surging. Rising demand for battery materials has triggered a corresponding rise in prices for lithium and cobalt, as well as a corresponding increase in the number of companies involved with these commodities. According to analyst S&P Global, exploration budgets for lithium increased in 2017, with 136 companies budgeting US $157 million, more than double the $73 million budgeted by 53 companies in 2016. Cobalt has seen a significant increase in budget allocation, with 52 companies allocating 35.9 US million in 2017, which was more than 4 times the previous year. With this in mind, I want to demonstrate why European investors should form a direct line of sight with Western Australia. As you may know, Western Australia is one of the world's most diverse energy and minerals provinces, with more than 50 different minerals produced in commercial quantities along with petroleum products. The state's capital city, Perth, is strategically positioned in the same time zone as much of Asia, in fact as much as 60% of the world's population, and in close proximity to our key growth economies in Asia and major export markets, China and Japan in particular. Western Australia is highly rated by the Fraser Institute for investment as a mining jurisdiction, and mineral and petroleum exports were 108 billion Australian dollars in 2016 and 17, with minerals accounting for over $88 billion. Now, the supply chain begins in Western Australia because, as this geographical map shows, the state ultimately has all the necessary raw materials for lithium-ion batteries. I understand it's very difficult to see this map, so I'd be happy to provide a copy by email after today. But we'll now take a closer look at 4 of these metals: lithium, cobalt, nickel and graphite. I'll give a sector profile and some of the developments and opportunities in Western Australia in those areas. Let's begin with lithium. In 2016, over 95% of the global supply of lithium was produced by Australia, China, Argentina and Chile. Global lithium reserves are in fact not scarce though. For instance, in 2016, the US Geological Survey estimated that global reserves of lithium equaled about 431 years of current production. They also estimated that reserves would continue to rise as lithium exploration intensifies around the world. Over half the world's lithium resources are located in the South American salt lakes of Chile, Bolivia and Argentina, which is known as the lithium triangle. Extraction from salt lakes involves pumping brine to the surface and into ponds for evaporation. Salts that do not contain lithium are crystallised, leaving lithium-dominated brine concentrate. As this method of extraction relies on solar evaporation, the weather plays an important role in lithium recovery. This was evident in 2017 when Chinese brine operations were negatively impacted by high rainfall and freezing of evaporation ponds over the winter. Given these environmental issues, brine is cheaper, or brine operations I should say, although cheaper to operate, are less reliable than pegmatite operations. In contrast, Western Australia's lithium reserves are overwhelmingly pegmatite derived, and helps to explain why the battery industry prefers to source lithium from Australia. Here's a forecast of lithium supply and demand. As you can see, the market is predicted to be oversupplied up until 2025, when a shortage, or significant shortages are forecast. And these shortages are based on a forecast lack of production capacity. So considering the vast reserves available, this highlights a significant opportunity for the industry to invest. Looking at Western Australia's lithium profile, the state currently has 5 operating lithium mines and a number moving towards final investment decision and development. Just going through them. Greenbushes, operated by Talison Lithium, which is a JV between Chunky Lithium Corporation of China and Albemarle of USA. Around 650,000 tonnes of lithium products are produced out of this mine annually. The mine is undergoing an expansion which will see its production double in 2019. Mount Cattlin, operated by Galaxy Resources. In early 2017, operations transitioned into commercial production with an upgrade to their processing plant completed in early April 2017, the end of April. Overall production capacity has been increased to 1.6 megatonnes per annum of spodumene concentrate. The Mount Marion mine, operated by Reed Industrial Minerals, which is a partnership by Neometals, Jiangxi Yangfeng Lithium Company of China and Mineral Resources. Downstream lithium processing facility will be developed near the site with a potential plant capacity of 20 to 25,000 tonnes per year of lithium carbonate, and a final investment decision is expected in late 2018, with commissioning possibly in 2021. Wodgina, operated by Mineral Resources. This mine produces direct shipping ore, which is further processed overseas, and its first shipment of ore was in April 2017. And finally, Bald Hill, operated by Tuana Resources in a JV with Alliance Mineral Assets. Production just commenced last week, and the mine expects to produce 220,000 tonnes per annum by the end of its very first year in operation. As you can see below, there are a number of other projects in development at an advanced stage. And again, after today, if anyone would like further details, I'd be happy to provide them. With respect to cobalt, almost all, 97% of the supply of cobalt is a byproduct of copper and nickel production. Therefore, supply is reliant on the demand for copper and nickel. The Democratic Republic of Congo, DRC, is by far the largest producer of cobalt in the world, with the next largest producer producing less than 10% of total supply. Having said that, there are ethical concerns about sourcing cobalt from DRC, particularly in relation to the use of child labour. And this is creating demand for cobalt supplies from other countries. As you can see from this slide, there are numerous mine locations across Western Australia with cobalt resources. Most resources are in nickel sulphate or nickel cobalt lateritic deposits. BHP Nickel West is one of only a handful of small producers of cobalt in Western Australia. BHP announced it is undertaking studies on a potential cobalt sulphate plant for use in lithium-ion battery precursors. In 2016, the production of cobalt in Western Australia was 5,140 tonnes, or a total value of $169 million. From a current exploration perspective, high-grade cobalt zones have been discovered in Western Australia, with Ardea Resources Limited, a cobalt exploration and development company, focused on developing its 100% owned flagship Kalgoorlie Nickel project, with pre-feasibility study completed Q1 2018 and definitive feasibility study completed 2019. The aim is to directly supply cobalt supply and nickel sulphate to battery manufacturers. Metal X Angelina Nickel Cobalt Project also suggests significant cobalt potential, and other deposits such as Mount Musgrave and Mount Thirsty are also currently undergoing scoping studies. Finally, Golden Mile Resources reported in mid-November 2017 encouraging drilling results at its Quicksilver Nickel Cobalt scanning project in the Wheatbelt area of Western Australia. Turning to nickel, here you can see that the Philippines is the world's biggest producer, with Australia currently just behind Canada. 100% of Australia's nickel production, though, is sourced from Western Australia. And in fact, Western Australia has 24% of global nickel reserves, and with currently 293 active nickel projects. Currently, a limited number of mines are operating due to depressed nickel prices. But demand for nickel sulphate in electric vehicle battery production is driving alternative uses for nickel in the absence of strong demand from the stainless steel sector. The proposal by BHP Billiton to build a nickel sulphate hexahydrate plant at its Kwinana nickel refinery will cost US $43 million, with first production targeted in April 2019. The potential exists for a low-cost expansion to 230,000 tonnes per annum. Western Areas has also announced plans to produce small volumes of high-grade nickel sulphate from its Forestani operations from March 2019. Finally, looking at graphite, China clearly dominates this market, producing over 90% of the world's battery-grade coated spherical graphite. The only substitute for the natural flake graphite is synthetic graphite. Synthetic graphite is produced by Japan, China, and the US, and accounts for 34% of battery-grade graphite market. However, the cost of production is more than double that of China's coated spherical graphite. Australia does not currently produce graphite, however, there are over 100 recorded graphite occurrences and 30 active graphite projects in Western Australia, which are listed here. Western Australian firm Mineral Commodities has announced plans to open Western Australia and Australia's first graphite mine, located approximately 100 kilometres west of Esperance. Minerals Commodities plan to start production in early 2019, and produce about 56,000 tonnes a year of flake graphite concentrate. In addition to mining and exploration, there is a significant investment currently happening in Western Australia in downstream processing. And I think these developments further confirm the attractiveness of the battery material sector in Western Australia to international investors. The first lithium hydroxide plant in Western Australia is under construction by Kwinana for Chunky Lithium and will use its Greenbushes spodumene concentrate to produce about 24,000 tonnes per annum of lithium hydroxide, and a second stage will lift production to around about 48,000. The facility will be the largest lithium hydroxide plant in the world, and Chunky is looking to establish a significant research and development facility on site, which will be its global R&D headquarters. Furthermore, Chunky are exploring process enhancement and improvement, battery recycling, and applications for aluminium sulfate. Albemarle, Chunky's JV partner, is also proposing to establish a lithium hydroxide plant, and construction of the first of the 5 20,000 tonne per annum process trains is to commence 2018. The Mount Marion Lithium Project JV partners, Neometals, Mineral Resources and Jiangxi Ganfeng Lithium intend to establish a lithium hydroxide process plant in Kalgoorlie, close to the Mount Marion project, and 100% of the 400,000 tonnes per annum production from the mine is already subject to offtake agreement with Ganfeng. And finally, Kidman Resources, in a joint venture with SQM of Chile, is undertaking a feasibility study into a $500 million lithium carbonate and hydroxide refinery plant capable of producing 44,000 tonnes per annum of lithium hydroxide and 37,800 tonnes per annum of lithium carbonate. Discussions are already being held with potential offtake clients, and a decision on whether the plant will proceed is expected in the next quarter. A point of interest on this particular project is that the Kidman JV is the only vertically integrated lithium manufacturer on the Australian Stock Exchange with complete independence from the Chinese conversion market. And there's just a number of other projects in the works at the moment there. So to summarise, I want to leave you with the knowledge that there are significant opportunities for international investors in Western Australia with availability of all current battery feedstock in the state. The clean energy revolution and growth of the electrical vehicle and battery storage markets are driving global demand for battery materials with exponential growth forecast over the next decades. There are over 80 companies operating or exploring for battery materials in Western Australia, and these include the world's biggest lithium players, Chunky Lithium of China, Albemarle Corporation of the USA, and SQM of Chile. However, it is important to note that the state is largely unexplored, remembering that second slide just showing how big Western Australia is. And there is significant potential to discover high-grade deposits. There are also opportunities for Europe to invest or collaborate with companies in Western Australia. From our perspective, Western Australia represents a very broad business development opportunity where the mining industry, investors and European battery sector corporates can look to source battery materials feedstock, but also to undertake value-add commercialisation along the battery development chain. And we encourage you to contact us to explore these opportunities in further. Thank you very much.